The stock market just touched fresh new record highs. That's a pretty impressive feat considering how low things got in the month of April. But here we are again at fresh record highs, which means it was a little bit more difficult for me to find high quality stocks for our monthly installment of the 5 best stocks to buy in the coming month, which in this case is going to be July. But I think I put together a pretty impressive list that you're really going to enjoy. We're going to go through each of these 5 stocks, look at analysts' price targets, but also look at my buy price target for each of these stocks. So make sure you stay tuned throughout the entirety of today's video. And before we begin, do me a huge favor, as it really helps the growth of this channel by just simply clicking that like button down below. Subscribe to the channel so you're notified anytime we drop new content, and let's jump into it. Hey everyone, Mark Roussin here, back for another video. As always, I'm a CPA and not a financial advisor, so please do not take this as financial advice. And before we begin, let me thank today's video sponsor, which is the Motley Fool. The Motley Fool has a ton of great resources and products available for investors of all different levels. And right now, if you go to fool.com/Mark, you could check out their 10 best stocks to buy right now. So before we begin with 5 stocks to buy in July, let's take a look back at our best stocks to buy in the month of June, where our picks last month did pretty good, especially with Marvell being a huge standout, gaining over 30%. I knew the stock was ready for a jump, but I can't say I expected a 30% move in a month. But hopefully you watched the video and you got in the stock. Let me know down in the comments if this was a stock you were able to get into. And now let's go to a fresh set of ideas for 5 stocks to buy in the month of July, beginning with stock to buy number 1, which is going to be Alphabet, stock ticker GOOGL. Now this is a carryover from the last month and going to be the only carryover from the June stock picks. But it's a stock that I talk a lot about, that I've done recent videos on, so I'm not going to spend a ton of time. But it's also one that I think you're going to look back a year from now and say, I wish I bought more of that particular stock. And this happens to be my largest individual stock holding within my portfolio. When it comes to Alphabet, they currently have a market cap of $2.1 trillion. Over the past 12 months, shares are down 6%. Year to date, down 8%. This is a great company, a diversified company with great leadership. And one of the areas that they don't really get much credit for is with their robo-taxis. All the talk right now has been about Tesla. But Waymo is way more advanced right now in terms of reach. Doesn't mean Tesla can't catch up, but in terms of the business valuation, Alphabet isn't really getting any credit for Waymo. Another area of the business is going to be with artificial intelligence. And early on, when it came to their rollout, they were really a punching bag. But they kept their head down, continued to work hard, and now they've made huge advances in building out their own model in terms of artificial intelligence. Let's take a look at the stock from a technical perspective. And as you can see here, the stock fell from a high of $207 all the way down to $140 per share in April. It regained the 50% fib level before dropping and finding support around the 38% retracement level. And now that can be a springboard higher to first retest the $180 level before once again heading towards $200 per share from my vantage point. From a valuation perspective, right now shares are dirt cheap at just 18.8 times, well below their long-term average of 23.5 times. From an EV to EBITDA perspective, you can pick up shares at some of the lowest levels ever in the company's history at just 14.8 times, well below the company's 5-year historical average of 17.7 times. And just to put this into perspective, close competitor Meta trades in an EV to EBITDA of 20 times currently. When it comes to a buy price target for me, again, this is my largest position, so I'm going to be a little bit more conservative here. Although I love the current price point, if shares fell down to around $160 per share, I would be yet again dipping back in. When it comes to analysts and their 12-month price target, they give Google a $199 price target, which shows 15% upside from current levels. And that brings us to July stock number 2, which is going to be the Trade Desk, stock ticker TTD. Again, going along the same lines with Alphabet in some instances with advertising. And when it comes to the Trade Desk, it's all about digital advertising. We are living in this digital space where even advertising is moving away from more of those legacy ways to all about digital advertising. When it comes to TTD, they currently have a market cap of $34 billion. However, over the past 12 months, shares are down 30%, and so far in 2025, it hasn't been much better, as shares are down 42% on this year alone. It has not been a stellar year by any means when it comes to the trade desk, and I think they're set up for a much stronger second half. And that's pretty easy to say considering it can't really get that much worse, with shares down over 40% on the year alone. But this is one that continues to be not only on my watch list, but one I continue to generate income with when it comes to stock options. And if you're interested in seeing all of my stock option plays, then consider becoming a subscriber to my Options Edge Plus subscription, where you get to see all of that and follow along and get educational content all focused on options trading. But getting back to the trade desk, they got punished in February when they reported their latest earnings as results disappointed. But more importantly, the guidance was not very good. However, the May earnings were much better and gave investors some hope that maybe management was just being a bit conservative given all the uncertainties. And with the stock down significantly, this looks like an opportunity. Now let's take a look from a technical perspective first. The stock fell from a high of $140 per share all the way down to below $45 per share at one point before moving higher again. And we could see the stock is finding some support on this upward trend it has been moving in since the April lows. And if it can get through that upper resistance band, we could be talking about a stock that can retest the $85 level, and then we're off to the races from there. From a valuation perspective, being more of a growth stock, we don't want to put too much emphasis on PE ratios, but currently sits at 37.7 times, which is actually pretty decent considering the 5-year average is over 60. But from a price to sales perspective, you can pick up shares at some of the lowest levels we have seen at 13.3 times, well below their 5-year average of 24.2 times. And revenues are expected to grow at around 18% on average over the next 3 years. And when it comes to my personal buy price, I'm looking for shares right around that $60 range. And I would probably enter this position through the use of stock options utilizing a cash secured put. When it comes to analysts, they have an average 12-month price target of $90 per share on the stock, giving it 32% upside from current levels. And that leads us to July stock number 3, which is going to be Qualcomm, stock ticker QCOM. This is another stock that I've talked a lot about on this channel, but also within my Discord community, as it's yet another way, a different angle to play AI. And this company continues to be a cash printing machine. When it comes to Qualcomm, they currently have a market cap of $171 billion. And over the past 12 months, shares are down 20%. However, year to date, they've eked out a 3% gain. Over the years, Qualcomm has been so connected with the sales of handheld devices, which have slowed considerably over the past few years. Just look at Apple's results. However, the management team has done a fantastic job diversifying the business to where they're still heavily connected to handheld sales. However, they are jumping into Internet of Things, AI, as well as one of my favorite areas of growth, automotive. The valuation compared to its peers is very low, but let's first take a look at the technical perspective. From August of last year until March of this year, shares of Qualcomm were trading in a range between $160 and $180 per share. But as you could see, shares broke lower to around $120 during the April lows. The downsloping red trend line was a resistance level, but what did we notice earlier this month was the breakout from that trend line and a confirmed retest, which sets this stock up for a higher level, a higher retest of $180, I believe. From a valuation perspective, shares currently trade at a forward PE multiple of just 13.6 times, a notch below their 5-year average of 14.3 times. From an EV to EBITDA perspective, you can pick up shares at just 12.9 times, again below their 5-year average of 13.8 times. These are very cheap multiples for a company connected to AI. In terms of a target buy price for me personally, I'm looking at shares of Qualcomm. Again, it's a stock that I've added to recently, but if it dipped back below to around $150, which is right around that support trend line, that's an area I would like to buy more. In terms of analysts, they have an average 12-month price target of $176 per share on Qualcomm, giving the stock more than 10% upside from current levels. And that leads us to July stock number 4, which is going to be Northrop Grumman, stock ticker NOC. And when it comes to this stock that we're talking about, it's not so much on huge growth opportunities or a cheap stock. It's just a high quality company, especially with all of the tensions that are going on, not only in the Middle East, but with Russia and Ukraine and the talks of a lot of allies increasing their defense spending. When it comes to NOC, they currently have a market cap of $70 billion. Over the past 12 months, shares are up 14%, and year to date, they are up 5%. It's been an uneven year this year for the 4 defense contractors, which are made up of Raytheon, Lockheed Martin, General Dynamics, and Northrop. As you can see here, RTX or Raytheon shares have been the best performer, up 23%, followed by General Dynamics up over 10%, but Northrop, they're up only 5%, with Lockheed being the only negative performer where shares have fallen more than 5% on the year. A lot of talk has been made of the drone strikes and the use of drone strikes in a lot of these battles that we've been seeing going on. And when it comes to Northrop, they've really carved out a bit of a niche in terms of drones. They're also heavily involved in the F-35 project and the B-2 bombers. Taking a quick peek at technicals, the stock hit a year-to-date bottom of around $427 in February and flew up to $545, which has proven to be a tough area of resistance for the stock. Shares then fell to around $455 from there, which is the 78% fib retracement level, and firmly bounced from there, beginning a trend higher as it marches back towards that $545 level. From a valuation perspective, shares traded a forward PE multiple of 17.2 times, which is a notch below their 5-year average of 17.8 times. From an EV to EBITDA perspective, you can pick up shares for 13.5 times, pretty much in line with their 5-year average of 13.2. So again, this isn't a stock that's extremely cheap right now. If anything, it's fairly valued, and one that we want to keep high on our watch list. In terms of an area that I'm targeting to buy shares of NOC, that would be right around $455, as that has proven to be a stout level of support for the stock over the past year. And when it comes to analysts, they have an average 12-month price target of $541 per share on the stock, giving it roughly 10% upside from current levels. And that leads us to July stock number 5, which is going to be McDonald's, stock ticker MCD. And when it comes to fast food, McDonald's has really been the king for a number of decades. There's a lot of new competition that's coming out. We've seen a lot of price hikes when it comes to consumers, and that has resulted in lower traffic for the company. For those of you that are part of my Edge Plus subscription, you got an alert on May 12th noting I sold out of my entire position of MCD, largely due to valuation concerns. And that has been a great move thus far, as these are the types of trade alerts you get with your subscription. We sold at $315, the high was $325. We were pretty much spot on. The company currently has a market cap of $204 billion. Over the past 12 months, shares are up 11%, but year to date, really sitting around even. The key to remember when it comes to McDonald's is the fact that they are more of a real estate company than a burger joint. They own not only the land, but the buildings for many of these McDonald's that are out there around the globe. And then they lease them out to the franchise owners, who then pay the corporation back rent and a piece of their revenue. It's a brilliant business model. Now, they do in fact have many corporate owned, so the numbers are still, and the traffic numbers are still very important to the business, and they want their franchises to do well. But don't get so fixated on those numbers because, again, this is more of a real estate related company. Let's take a quick peek at technicals. The stock has been on a one-way ticket lower, but the RSI levels below 30 now has me intrigued. And also that $275 level, which has proven to be a key support level earlier in the year. That's where I have my eye on. We don't want to catch a falling knife, which is why I like to utilize options to enter into many positions. And if you're an Options Edge Plus subscriber, you can see I have an open cash secured put on McDonald's. And look what the strike price I chose for it also. I'm telling you, you gotta join our programs and see how to make consistent cash flows. From a valuation perspective, shares trade at a forward PE multiple of 22.9 times, well below their 5-year average of 24.4 times. From an EV to EBITDA perspective, you can pick up shares at just 18.4 times, again below their 5-year average of 19.7 times. When it comes to a buy price target for myself, again, that 275 level that I mentioned to you earlier is exactly where my cash secured put strike is sitting right now. In terms of analysts, they have an average 12-month price target of $335 per share on the stock, giving them potential upside of close to 20%. So there we just looked at 5 stocks that I'm looking to buy in the month of July. I gave you my buy price targets. I gave you analysts' price targets moving forward over the next 12 months. Let me know down in the comments section, which of these 5 stocks would you be interested in buying at current levels? And if you haven't done so, show your appreciation by simply clicking that like button down below. It really helps and shows your appreciation for the content we put out here on YouTube, and I truly appreciate it. So thanks again for stopping by, and we'll see you in the next one. Take care.